Hello everybody and welcome. This is Tushar Chande. Welcome to another session of technical analysis of the S&P 500 index for the week ending May 10, 2024. A gentle reminder, past performance is not necessarily indicative of future results and there's risk of loss in trading. A positive week in the markets with the S&P up about 1.85%. The industrials were the strongest, as was the equal weight ETF. Bonds were a bit weaker and technology was up, but not quite as much as the S&P 500 index. Daily data for the S&P 500, we are plotting the adaptive regression channel with a 16-day look back. Zero means it all the way to the last bar, plus or minus 1 sigma bands and plus or minus 2.5 sigma bands. So a clearly defined uptrend. We got support at the lower band. Now we have resistance at the upper band around 5,300. Still daily data, a little bit longer look with a 40-day look back. And you see we've just broken above the plus 1 sigma volatility bands, and resistance will now be in this general area around 5,300 above the old highs. This is the TC Blast indicator, which is buy low with an adaptive stop. It's a counter trend entry idea. Market is weak, then we had a rebound. This was the trigger line. Closes above the trigger line generally give us an entry point. This is a trailing stop. So market has followed through on the initial breakout, and our trailing stop is quite far away, so we just have to wait for this evolution to see how far the market goes. This is the fully automatic moving average on daily data with default values in 5 and 30. So the exponential moving average length varies between 5 and 30 days. The offset varies between 5 and 9 days. We're using 100-day ATR and we're plotting plus or minus 100-day ATR units above the moving average. We have a nice breakout outside the band, so we have a well-established uptrend, and a pullback should give us support around 5,100, let's say. This is another slice at the data. We have the PALS indicator, which is a parabolic accelerating long stop. We have a 10-day breakout, so the stop has started moving. So we'd have to now wait for the market to come back and knock us out and see how far the trend goes. The upper panel has daily data for the S&P 500. The lower indicator is the 13-day doji indicator. This bar confirms we have a 13-day doji. The opening was at 5064.59 here, and the close there was 5064.2. So as good a doji as you're ever going to find. So we're looking for a breakout outside the doji, and sure enough, we have a successful breakout. So another example of using a distributed doji to identify breakouts. This is a longer term look at the trend structure. We're using the CHATS indicator, the Chande Absolute Trend Strength indicator, in both the upper panel and the lower panel. The value is above 70, which means we have a strong uptrend. And this confirmed in the upper panel by changing the color of the candles to green. Notice during the uptrend we had green candles, then a little consolidation, and green candles again. So on a long-term basis, we're again detecting a strong uptrend. So this is a new indicator I'm experimenting with. It's a trend persistence, a momentum persistence measurement. And when the trend is up, you're going to get a green look up here. Then we have a red portion here, which means the trend was down. Now it's turned green again. So it's detecting positive momentum or upward momentum. And there's heavy damping, so it's a little slow to react. And we want that because if we have a long trend, we want this to persist with the green flag or the red flag. This is another trial indicator. This is a very complicated measurement with about 45 to 50 ETFs. So a very broad and diversified measurement of the trend strength. The scale is plus 300 to minus 300. So observe we're back up to plus 300 this week. So the breakout confirmed with a plus 300 reading. Generally, reading above, say, plus 200 would occur during uptrends. So see, during the uptrend, we are more or less above 200 for most of the time. This is a relatively sensitive indicator, so you see it bouncing around quite a bit, but it's encouraging to see it at plus 300. So looking ahead, new highs are likely. New highs are in sight. There's risk of a false breakout when we test new highs. Inflation data are still key with the CPI due on Wednesday, And potentially we have favorable seasonality through the end of July starting next week. So hopefully they'll all come together and give us a nice uptrend. So to wrap up, we need sustained improvement in inflation data, and we want the unemployment data to gradually decelerate so bonds will be happy. If you want to know more about the PCE, you can look at this drill down at this YouTube video. All the tools are at trendspider.com. I hope you like and subscribe, and thank you for listening.